Sir, I need a big hike.
I'm busy.
Sir, I need more money. Sir, I am investing in the US right now. And I will become an international investor very, very soon.
I won't give you the hike, but I'll save you enough money equal to the hike, and if I do, then no hike. I will give you 4 or 5 reasons why you should invest and not invest, so you can decide for yourself also if US is right for you. Second, we'll talk about taxation. You have to pay taxes, right? Let's understand how that works. And third, when is the right time to invest? I actually have a really cool strategy here. I'll share that strategy with you.
Let's start with the strategy.
We cannot do that. First, I want to start with something else. Okay, first thing we need to do.
Yes.
Go get that.
What?
The Jenga things.
Jenga. Your Jenga.
Now, see, now one of us have to be US and one of us has to be India.
It's very obvious. US.
Okay, cool. So, all right. Now, when we say rupee is depreciating, we don't really understand what that means. Here is what it means, okay? So let's suppose that this is currency. And let's suppose I take one of my currency. So we take one of this currency, we convert it into dollars, and now I have US stocks worth X amount over here. Now previously, it used to take only, I'll borrow this from you, 1 block to get one of this.
Correct.
Now when the currency is depreciating, what happens is that this happens. A second and a third is available for the same conversion. So I get more rupees for the same dollar. Now let's suppose you bought a stock. The stock is trading at $100.
Okay.
And after many years, it's still trading at $100.
That's a very bad company.
No change. But the rupee has depreciated a lot. So what previously was just 1 block is now actually worth 3. So if I take this back, I will get 3 blocks back. So mera to return ban gaya because the rupee was depreciating. Interesting. Did you get it?
Haan.
So if you look at this over here, you'll see.
Okay.
In 2012, the dollar to the rupee was 53. In 2025 is 87. Now it's 90 something. So if you look at this, in 2013, the S&P gave 32% in dollars. However, in rupee terms, because 32% to mila, you also had the rupee depreciation happening. So it's not just 32%, it's actually 49.6%. So that difference is 17% extra because of how the economies are functioning.
So that's how I'll make more money.
So assuming that the rupee continues to depreciate,
So you're saying rupee should
then this
depreciate
is
more.
an advantage for an Indian investor investing in the US. This should not be the reason you actually invest in US. It's an interesting cherry on the cake.
Got it. Sir, 1 second. So everyone on the internet, they're talking that depreciating rupee is bad. But with all of your explanation, what you're saying is that falling rupee is good.
Hold up, there is no good and bad in economics. It depends on what side you're in. So if you're in India and you're a software exporter, you'll have a different opinion. If you're in India and you are buying US stocks, you'll have a positive experience about it because the depreciation actually helps you. Depends on your perspective.
Oh.
Abhishek always asks for a raise and I never give it to him. If you want him to get a raise, hit that subscribe button, please.
Please.
The next is diversification.
Arey, sir, we know what diversification is. What every time you bring diversification? Diversification? Diversification. What diversification?
Sun lo. The question is, how connected are Indian markets and US markets?
How connected?
So Nifty 50 TRI and S&P 500 TRI are only 26.6% correlated.
Is that good or bad?
It's good.
How do you know 26% is good?
Oh, 26% correlation between S&P and Nifty 50. That means they are far enough.
Acha.
100% correlation is they're the same asset. So they are,
That's okay.
It is diversified, it's fine. Imagine in India, if there's a domestic issue, there's problems within India, then the equity markets will temporarily fall. You want some cushion where there is no correlation between what's happening domestically in India with some exposure to an international market. Could be US, could be a different country.
Arey, perfect. This is what I did.
But he made the mistake of investing his entire portfolio in the US. एक बार ये comment में बताना, was this smart?
Okay, sir, I have just one thing. When you compare India and US, so India is like rising company. US is established company or the reason why I have invested in the US markets is because वहाँ पे this will not happen. है ना, it will be like this, probably हल्का सा, but it will move ऊपर. Like unlike India, like it is this, and again bottom, and then ऊपर आ रही है, and ऐसे चल रही है.
So he's talking about volatility.
हाँ,
There's a way
correct,
to measure it. So he's saying a mature, developed economy will not be as volatile as a developing economy like India.
Correct. Thank you.
Let's look at the numbers here.
What numbers?
The volatility annualized for Nifty 50 is 16.3%.
That's very high.
And S&P 500 is 18.15%. S&P is actually higher. So this notion of thinking that a mature economy is less volatile may not be true.
Is that a mistake? जो मैंने किया?
No, it's fine.
Are you sure?
Yeah, your expectation that वहाँ पे the movement will not be high is wrong. There is volatility and it's fine. Equity markets are volatile, that's it.
Correlation, diversification, volatility, sub done. Now explain the strategy.
The strategy, right?
Yes.
So it's very simple. Tell you in the end. I want to show you something. Okay. Mid cap and small caps have actually given a fantastic return at the time of filming this. These indices have actually done really well recently. Like imagine if you had 2023 and invested, what would you have seen?
I should have invested here. This 2022.
But you cannot invest here like this because it's in the past, no? The same thing is true for mid-cap 100 as well. Look at this. How much return did it give in 2003?
143%. Oh, I was very small.
And what was the return in, say, 2013?
Minus 6%.
Point is, if you look at a fund and say it's given such high returns, I'll invest, वो थोड़ा recency bias है. Please look at this CAGR over 5-10 years. 10 years to give you a better idea.
And sir, where can I check this CAGR?
It's pretty simple. Go to this app here and you can check the past performance of a stock or a mutual fund. And in case you don't have a Demat account, you can open one on Zerodha for free. Click on this link in the description to open it. Now let's do an exercise in recency bias. I'll ask you a question. You'll see it on the screen and you answer it out loud, okay?
And strategy later.
Strategy I'll give you. Okay, so this is SanDisk. Tell me the returns.
Pen drive.
Yeah, tell me the returns it gave in 1 year.
4,600 returns in 1 year.
I hope you also said it out loud. Do this exercise with me. Second is Nvidia.
1165%.
Correct. And then we have Micron.
955%. But that's a lot.
Now finally, let's look at Nifty 50.
TR index. Minus 4%.
And S&P 500.
Is plus 27%. So that's
it. That's it.
That's what?
People look at this one piece of information. यार इतने stocks ऊपर चले गए. यार Nifty is given negative. US is given plus 27%. The truth is, no economy, no asset is better. We've talked about this many times. All of them go through cycles. I'm sure if you're watching this video in 2030, you would know that Nifty is actually probably, hopefully, given some better return in that future.
Perfect. Strategy time.
Okay, the strategy of when and how to enter the US market.
Correct.
Right?
Yes.
I'll tell you, but before that, taxation kar le. Basically, when you're investing in the US,
I have to pay taxes.
up to 10 lakh rupees, you're not paying taxes, right? You're still investing. After 10 lakhs, a TCS is deducted or a tax collected at.
Source.
Correct.
Yes, sir.
Which is 20%. So it's a larger number. But if you cross 10 lakh rupees, a TCS is collected and it is cut for a year. Okay. So that's one place where you'll see like some outflow. That's
But I can
TCS.
reapply, I can file my ITR and get that TCS.
Correct. So when you're filing your ITR, you claim that TCS and it will get adjusted in your tax due.
Okay. Fit here. Taxation done.
No. There is a limit also to how much money you can send abroad, by the way. There is an individual liberalized remittance scheme limit for a person. It's 2.4 crores. This includes everything. So if you're doing overseas education, forex travel, traveling, that's your LRS total limit, your foreign outflow.
So next year I can send another 2.4 crores.
If you have that much, बहुत बढ़िया आप ये video क्यों देख रहे हो? There is one more thing on capital gains. If you're selling your US stocks before 24 months, then that gain is added to your income, your taxable income, and according to tax slabs, you will pay the tax. So it's called short-term capital gains before 24
What's
months.
the long-term capital gains?
After 24 months, if you sell, then it's 12.5% without indexation. So 12.5% of the gain.
Oh,
right? And basically, India will tax you, not the US. Then we have dividend tax.
now what's a dividend tax?
Income. When you've invested in the US in stocks, you'll get some dividend income.
So spell pay tax.
Of course.
Bus, I know, we know, strategy.
No. So I'll explain. So dividend tax is pretty simple. You get, let's suppose, $10 from the US as your dividend income.
Okay.
It'll actually come as 7.5 because they'll deduct 25% in the US itself.
ठीक है.
Account mein you'll see $7.5.
Okay.
But the income is $10. So in India, you will say my income was $10. India will say you owe me tax, therefore give me 30% based on whatever your tax slab is.
Okay.
So you will pay, let's say, 30% of that $10, let's say $3.
Okay.
But then won't you feel like I've already paid $2.5?
so
ये दो बार क्यों tax हो रहा है?
$3 plus $2.5.
You paid tax twice, right?
Correct.
So the Indian government will say, okay, makes sense. You should not pay twice. So you pay us the $3, but yeah, correct. Minus
2.5
minus the 2.5. If there's something remaining, you give me that small difference.
1.5.
Whatever that difference is.
1%. Oh, this I didn't know.
Yeah.
Oh,
Now it's time for
the strategy.
yes. So right now Nasdaq is right here. This is the monthly chart of Nasdaq. Each bar represents 1 month.
Haan.
Is the market high or low right now?
High.
High. You all agree high?
Correct.
Okay. First, market seems high. Write this down.
Yes, yes, sir. Market seems
Second,
high. Yes.
if you had a prediction machine and you could buy the market at any time, what were the best times to buy the market?
2010, then maybe 18, 19, then maybe 2020,
Okay.
then maybe 23.
Okay. So basically, all of you think buying near the dips was the best time. Correct?
Okay. Yes.
All right. Third question. Can you predict the dip?
No.
Probably not. Now let me show you something that will change the way you look at this chart. The market seems,
Very high.
but is the market always high?
It looks like.
So what if we checked how many times is the market always high in the last 10 years or 20 years? So the S&P 500 is near its high 91% of the time.
Matlab.
So let's suppose we have 10 candles here, okay? Month 1, month 2, month 3, month 4, month 5, month
6, 7, 8, 9, 10.
91% of the time, or 9 out of 10 months, the market is near its high. And the way I've defined high is within 15% of its 1-year high. It's basically up high there. And only one time it's below.
Okay.
Statistically, not every year, but statistically.
Point.
Which means the market will always feel high and you will always feel, yaar, ye to bahut upar hai, I cannot invest. It's too high, I will invest once it falls. If you're waiting for that one fall, it may happen, but it's very, very low probability.
So what you're suggesting is we should invest right now.
Yes. The best time is actually right now, whether it's S&P 500 or even Nasdaq.
Was that the strategy?
That's the strategy. I'll also show you one thing. Oh, one minute. Let me show you something. You see this? This looks pretty high, right? 2021, look how high it is. Correct?
Very high.
Now, let's go to, say, 2025, the dip. Can you see the dip?
Very deep.
This dip is higher than that all-time high.
Yes.
So even if you wait 5 years, this dip that's going to come is higher than the all-time high. So you're actually buying higher. So please don't wait, because it will get expensive over time. That's the strategy, yeah. So you take an index, invest every month, and that's the strategy. That what you can do is, if the market dips a lot, if you have some lump sum amount, you can invest a little bit more. Did you not like the strategy?
I loved it.
What's the problem?
Increment.
I saved you so much money. All of your money will be invested now. Please don't invest all of your money in Nifty or this Nasdaq. Or please spread it out. Make a small portion US, not everything.
And the strategy was invest your money right now.
Yes, because this is a great opportunity. मैंने गलत बोला क्या? I'm a good teacher, no? I'm a good teacher. Guys, the 01 crew over here puts in a lot of effort to do everything we do over here. And we go back to the basics and teach all of this in an entertaining way so you can understand how personal finance works. So if we've done a good job, please shout out to the entire crew, 01 Cuties in the comments. And if this was useful, please hit that subscribe button. See you in the next episode.